Hey, my name's James Wilkinson and welcome to my YouTube channel. Now in this video, I want to talk about something that could have a big impact on house prices, and that's 100% mortgages. We're going to go into detail on 100% mortgages, what that means for property investors, first-time buyers, and anyone else buying a property in the market, because it is going to make a very, very big difference. Now, before we get into that, let's have a quick update on the 5,000 subscribers, which we're trying to hit. I think we're going to hit that this week. We are currently on 4,957 subscribers. We're so close. 43 people need to subscribe, and then we'll stop talking about this target. So could you do me a favor, so we have to just focus on other stuff, and that's smash that subscribe button and hit the bell notification if you haven't done already. Last video had 2,000 views. We could have done it with that. I know a lot of people are subscribed already, but if you're not subscribed for any reason, we got new content every single day. Subscribe and hit the bell notification. Let's hit that in this video. So 100% mortgages are back. Now, we had mortgages like this prior to the 2008 crash. And so a lot of people were looking at these headlines and thinking, this is potentially bad news, because what we're going to be having is people able to borrow huge sums of money with very little risk to themselves. And in 2008, people just gave back the keys because they didn't have any deposit in there. So they weren't really fussed about keeping those properties when negative equity came on the scene. So banks now are just about to launch, or Skipton Bank Building Society, we've actually got one of those up the street from us in Dorking here. They're launching 100% mortgages. And this is slightly different to 2008, because in 2008, you could get 110% or 120% mortgage. What does that mean? Well, that means if you bought a house for 100 grand, they'd give you 120 grand, meaning you'd have 20 grand in your pocket to do refurbishments and stuff like that. Or as people did, buy holidays. And then that worked very well when the market was going up. Now we're in a bit more of an uncertain time, and 100% mortgage is that little bit more risky. So in this video, I want to talk about the pros and the cons of 100% mortgage. So let's firstly look at the pros. So the pros are, first and foremost, no deposit, right? That is great news for a lot of people struggling to get onto the property ladder. Now, there's tons of people like that in that situation, and especially first-time buyers. And what we always find strange is that they say that you can't afford to buy a house, but you can afford the rent, which is more than the mortgage payment would be. And so this would eliminate the need for a deposit and help more people get onto the property ladder. It would help first-time buyers. And so you'll be able to get onto the house ladder faster. And so the mortgage payments would be cheaper than renting. Cheaper than rent. In most instances, the mortgage payments would be cheaper than renting. And then once this has been had for a while, you get to build up equity, right? So once you've had this property a while, and it might not happen in a rising, in the current market, but over time, that property will create equity. Now, there's two ways that will create equity. One is you're going to be paying down a monthly payment. So if you borrow 100 grand, at the end of year one, you might owe 98 grand. So you've got that £2,000 in equity built in there. And over time, as you get further through the mortgage, more money will go to repaying down that loan and less will go towards the interest. The market will also go up at some point. And so that will give you an opportunity to get a better deal, because you'll have equity in that property over time. So those are the pros. Now, what are the cons? And then we're going to go into what this will probably end up doing for the property market. So the cons are, you're probably going to pay a higher interest rate. So because there's more risk to the bank, they want to make sure that they're covered and have a little bit more protection, and they make more money on that. So the interest rates are gonna be higher. They always are on these types of deals. And so it's the same when you buy a car, right? If you don't put a deposit down, you end up paying more on a monthly fee than if you do put a deposit down. And that reduces the risk to the bank. So the interest rates are going to be different, very different. Now, the bigger concern on these is negative equity. Particularly in today's market, where the house prices are a bit turbulent. We've had months going up, months going down. The back quarter of 2022, house prices definitely went down around 3%. The forecasts are saying that by the end of this year, we'll have some more drops as well. So if you went into one of these deals and you needed to sell next year or the year after, you could find yourself in negative equity, whereby you have 100 grand that you owe the bank, but your house is now worth 95 or 90,000 pounds if the market dropped around 10%. So that's one risk on that. The other thing is that what you might need is a guarantor. And so you might need a family member that just guarantees that mortgage payment for you and just gives you that little bit more security to the bank. So if you don't pay that debt, that they're going to go after the guarantor, right? So you need to have someone that you really trust, that trusts you more importantly, and that can take a little bit of work to convince someone to be a guarantor. I mean, I wouldn't want to be a guarantor for certain people that I know, but for my kids, yeah, totally, that would be fine. But not everyone's in that position that they have someone that could be a guarantor for them as well. What else is there? That's pretty much it, really. So those are the pros and cons, really. So pros are no deposit, cheaper than rent, clearly. A mortgage should be cheaper than rent, and you're going to start to build up equity. That's good. And then when you build some equity up, then refinance and go on to a better deal. Cons are you're going to definitely have higher interest rates. You're going to have a possibility of going into negative equity, and you might need to get a guarantor. Now, what do these 100% mortgages mean for house prices? Well, look, we're talking about prices going down. I think this is another tool that is going to be out there to stop the prices going down as much as people might think. Yes, the criteria to get these mortgages might be a little tougher than getting a normal mortgage. We've said that. You might need a guarantor. You're going to have higher interest rates. Of course you are. But it does put more people into the property market that could be just generation rent right now. And they've got low barrier to entry. And that gives them that little bit more opportunity to get into the market, because there are tons of people right now that are saving for their first property. They're saving that first deposit, and that could take them 5 or 10 years, whereas this route could get them in the market this year. And that's what they're trying to do by this, is get some more people into the market. More buyers in the market will keep prices higher. They still could go down, and I think that they will go down somewhat this year. Of course they will. There's like interest rate rises and all this stuff on the horizon. But I just think that this is an opportunity. Would I give one of these to my kids? Yes, 100%. I would give one to my kid and have Georgia. Emily's a baby, so she can't. But Georgia still lives at home with us at the moment, although we've got an investment portfolio. I wouldn't have a problem with her using this strategy because we can back her up on it. And so I think if you're looking at 100% mortgage, go for it if you've got someone that can support you. You don't want to be like risking negative equity, higher interest rates and all this stuff if you don't have people that can support you and guarantee you on that journey. But I think this is generally a good thing. Hopefully they're not going to go to 110% or 120% like they did last time. But if this helps more people get on the property ladder, that's what we're saying people just can't afford to do. So anything that can be done to help them, I see as positive. Let me know your thoughts in the comments. If you didn't subscribe earlier, have a look at the counter. We're so close to 5,000 subscribers. So smash that subscribe button and hit the bell notification. Comment below with your thoughts. Go and check out all the other content on the channel, including this video right here.